What's going on, everyone? Welcome back to another video. Today we're going to be covering how to trade trends the right way. This is what the entire video is going to be based off. 80% of the time price is trending, it will continue its direction. 20% of the time price is trending, it will reverse direction. For those of you that prefer continuation trading, you are automatically at an advantage. For those of you that prefer reversal trading, you're automatically at a disadvantage. I'm going to explain that throughout the video, what it means and how you can better increase your odds trading regardless of what your winning strategy, your trading model, whatever it might be. If you want to know where this concept comes from, it's directly from the Fibonacci sequence. Golden ratio, also referring to everything in nature essentially being perfect. When we correlate that directly over to the market, obviously there's not a spiral on here, but everything is essentially in a perfect trend 24/7. You can draw as many lines as you want on the chart using the trend line tool, but you're always going to find some kind of trend where something is making a higher low or a higher high, all within a trend. In an ideal trading scenario, you have 5 retests of a trend, with the 5th retest being the losing one, meaning that 4 retests after that trend is established, those are the 4 that you win on. The 5th one, 1 out of 5, or that 20% is the one that you lose on. Now you know the concept, but how do we go about trading it? We're going to take a look at gold for today. Very clearly in an uptrend, 3.6% up on the day, up the entire day, a couple of pullbacks here and there. Where are my entries? Where are my exits, stop losses, whatever it might be? Now, for me personally, I like to add the 50% retracement onto these levels, and that is where I like to enter. For last night, it was in an accumulation phase, so pretty much no trades there. What I did do was I slapped a pretty nice trendline bottom on that, tried taking an entry on the range bottom. It ended up working quite well. Missed the entire move up at 1 to 3 a.m. in the morning, is what it is. Where do I go about entering? The beautiful thing about this concept is that it lines up with whatever your trading strategy might be, unless you are a reversal trader. Unfortunately, this will not help you. If you are looking for continuations, very much like I do with the London 50, you slap a 50% mark on there, you're looking for price to go up, come down, retest that 50%, and then continue. Obviously, that was not the case for today. So what do I do with these Asia trades that has worked so well for me recently? Now, taking a look at gold from Glopex open on Sunday, I simply like to wait for a pullback on whatever candle it might be. You might want to call it chasing the trend, whatever it might be. I wait for a pullback. If price is up 50 points on gold like it was on Sunday's open, it's probably not coming all the way back down to 50%, let alone coming back down even 20%. So I like to go down no further than the 15-minute time frame and simply look for a wick once the candle opens. Or for Glopex opens, I like to wait for 30 minutes. After that 30 minutes, I look for a retracement of typically 50% of that second 15-minute candle. Now, this doesn't have much of a rhyme or reason to it for Glopex open. Obviously, you're going to have trends up, trends down. It's as simple as just waiting for a 50% correction. I enter, I have a 5-point stop loss. That's my model for Asia session for Glopex open. In this case, I entered at about 4,675. My stop loss was 5 points. This was a 3-point wick underneath 50%. Got a beautiful continuation up. Hit a 12-point win. I ended up securing for, I believe, $20 on 20 Apex accounts, so still 400, but besides the point. Essentially what you're doing, or what I do, is I look for the open of Glopex, 6 p.m. EST. What is the trend? What's the establishment of the trend on those first 2 15-minute candles, the first 30 minutes? Mark out the 50% of the second candle. Drag that to the right, and you're looking for price to pretty much just retrace to that second 50%. This case, I did take an entry on Thursday last week. This one ended up being about a 6-point win, $60 over 20 accounts. Now, it's not a crazy high risk reward or whatever you want to call it, depending on your sizing, but what it does get you is a consistent win, consistent small win that starts your day green. So we mark out even if you want to do the full bar, you mark out 50%. Sometimes you're going to get the full retracement, sometimes you're not. In this case, it did retrace right to 50% of that entire 30-minute move, and then you got a beautiful continuation down. I took this trade at, I believe, about 4,617, 5-point stop, did not get hit, and then it ended up crashing all the way down to 4,587, missed out on another 40 points or $400 on one micro gold. This is just my own play or spin on the strategy. It lines up with whatever you're trading for a trading model. Let's say you do change in state delivery for a reversal strategy. This isn't really going to help you all that much, but it can give you a clear picture of where price might go for, let's say, a price target on a reversal. You had a change in state delivery on this 1845 candle. Okay, go and slap that 50% mark in. That should be where price pushes up to. That's a good price target for you. Now, that's just an example. The whole concept itself is that you do not want to be fading the trend. Very clear depiction of what it shows on Tuesday, January 13th, is the trend was down for the entire day on gold. Now, the question I get asked most often is, how do I determine what the trend is? How do you know what the trend is? It's as simple as just going and looking to the right. What is the gap up for the day? Or waiting an hour, 2 hours, 3 hours. What's the direction of those candles? You can also go and do this on Qs. Very clear direction for today's price action. 2.12% down in the day. However, we were also gap down 1.7% to start the day. Even though the trend is up from pre-market, if we go and take a look at M and Q on the larger time frame, let's pull that up there. We can see that this has just continued to trend down the entire time. Now, let's say you like trading trend line resistance. Go and slap a resistance line on there, and there's your trend. Those are your entries. Wait for price to retest up to that. You know that the trend is down. Very slim chance that price continues through that trend line resistance. 1 in 5. Slap the bottom line on there. You're not looking to take bounces. You're only looking to play the direction of price. You can go into whatever time frame you want. You can go into the 1 minute. You can go into the 5 minute. The shorter the time frame, the shorter the entries. In this case, if you were on the 5 minute time frame, this was a trend up. If you were on the 3 minute time frame, also a trend up. Even on the 15 minute time frame, trend up into a trend down. So every retest to the downside, maybe not look for long because the overall trend is to the downside. But as soon as this starts pivoting to the downside again, you're looking for wicks or green candles to enter into. Have a conservative stop loss, 10 points, 20 points, whatever you want. One of the concepts that I came across for this strategy as well as concept is have your stop loss be the top of the previous 15-minute candle or the low of the previous 15-minute candle, depending on what the trend is. Mainly for overnight futures on gold. And this is why I've been trading. I think I've had 2 losses over the past 2 weeks, 3 weeks maybe, since I started alerting them within the Discord. You're just looking for that first 30 minutes of direction. Now, if it's something like this, you should be able to infer that, hey, this is not really a trend. This is sideways. This is an accumulation phase. You can also get that from just scrolling out and seeing, oh, price has been sideways for the better part of 5-6 trading days. Probably not going to trade within that. But as soon as price breaks the accumulation, then we can start looking for a nice run to the upside or downside. All you want to be doing is make sure that you're maintaining trend. And it all comes back to 80% of the time price is trending, it will continue in that direction. 20% of the time it will reverse. You're just looking for continuations. You can have whatever size stop loss you want, as long as it's not blowing your account, obviously. But you want to make sure that you're maintaining the direction of that trend. Again, for me, I like measuring out 50% lines, depending on where price retraced to. If it retraces to 50%, that typically is the best entry I can get. It's not always going to retrace to 50%. If we go over, again, just an example for that first 30 minutes of Glopex Open, this one would have been a loss. It was going sideways. There wasn't really a trend on this quite yet. As soon as that started trending to the downside, Then you start looking for pullbacks to go short into. And it's as simple as just being able to draw two channels parallel to each other, and that gives you your overall trend to the downside. Okay, every time it hits the top, I'm going to look to short it. I'm not going to long it on the bottom because that's going to probably lead it lower. I don't want to be inversing the trend. The most helpful tip that I can give in this video, if you guys have made it this far, is just make sure that whatever time frame you're trading on, whatever way price is moving, you are not trying to go long or short. You're not trying to catch a knife. Plenty of examples of people that I know that do this on the 15-minute time frame regularly, and they consistently blow accounts. I was even at this point one time in my trading career where you look at the chart, perfect example, today's PM session on Qs, and you say to yourself, no way this is going lower. I'm going to buy it. Just going to be a quick scalp. I'll risk $50, but I'm looking for price to make a miraculous 400-point move back to the upside. Not really going to risk too much with it though. And then you do that trade 10 times over, and now you no longer have a futures account. So again, what you're looking for is just a continuation in trend. You want price to continue in one direction 4 out of 5 times, 8 out of 10 times, 16 out of 20 times. It is going to continue in that direction. Only 4 out of 20, 2 out of 10, 1 out of 5 times, it is going to inverse and make a reversal. So if this was a trend up from pre-market, we had, let's say, 1, 2, 3, 4 retests. The fourth one ended up failing, and that was a reversal. But you still got 3 really solid plays out of the longs. And then once you get stopped, your stop loss is at a point where it will validate the trend is reversing. So if you get stopped out on a trade, you're no longer looking to continue in the uptrend. You're no longer looking to continue in the downtrend. You're waiting for a new trend to establish. And again, that all comes back to the Fibonacci sequence, which is very relevant in trading, very relevant in numbers. I mean, Google search, you have the 7th option here being one that's on trading. Everything comes back to just ideally being perfect in terms of this Fibonacci sequence, Fibonacci spiral. And that is how it determines what the trend is. And you can also go, if you wanted to, you could slap a Fibonacci retracement on here, and maybe those are where your entries are. Let's say we mark out the entire Fibonacci retracement, bottom to top, and we enter at each respective Fibonacci level, 0.78, 0.61, 0.5, 0.38, whatever it might be. Obviously, that's just a wild idea thrown out there, but you get the point. Again, if you made it this far in the video, you want to maintain trend direction. You want to maintain trading with the direction of the trend. You do not want to inverse the trend. Inversing the trend is how you're going to lead to blown accounts. That is my strategy for trading Asia gold, Glopex gold, whatever you want to call it. Wait for that 6 p.m. open. Okay, great. That 6 p.m. open, if that doesn't determine direction, you can wait. Wait to 7, wait to 8, wait to 9. As soon as direction is shown, you're waiting for a retracement to get into that play. Now, these ones, pretty wide range on this. Might not have a 5-point stop. However, we are looking at a 15-minute time frame, so it's a little tricky to back test. I believe I did end up taking one on this Sunday the 28th. I can almost guarantee I probably took a short as soon as it ended up retracing this candle. Once it did retrace that candle, you can see once we hit 50%, it had a 12-point wick back to the downside. That wick, obviously looking at a 15-minute time frame afterwards, doesn't look like a win, but during that trade, that might have been 5 minutes within the trade, 12 points on 1 micro is 120 bucks. I probably caught $40 to $50 of that move at best, but that's the entire concept right there. If you want to go to larger swings and larger stop losses, then you can mark out the entire trend line itself. And your entries are at the top of that trend line resistance, and you're targeting to the bottom of that trend line. Ideally, you look for a continuation down. A great example here as well. We'll do this being the last one. The trend is continuing to the upside. It's very, very simple to draw. And there is always, always, always some kind of trend happening. Sometimes they're very, very sharp. Sometimes they're and accumulation trends, everything is within 2 parallel lines, and you're trading that trend at any given moment. Hope you guys enjoyed this video. I will end it off with the stat again. 80% of the time price is trending, it will continue in its direction. 20% of the time price is trending, it will reverse direction. See you guys next week for another video. Peace out.